Today, I'm going to share another cool strategy using one of my favorite indicators, the Ichimoku. Flashback to 2022, I shared a Tenkan Kijin crossover strategy for the 4-hour dollar-yen, which is the most popular way to use the Ichimoku. This time, I'll share a more obscure technique, the Kumo twist. But first, here's a recap if you're new to this fine Japanese creation. The Ichimoku consists of a series of 5 averages. The Tenkan, or conversion line, is the midpoint of the 9-period high-low range. The Kijin, or baseline, is the midpoint of the 26-period high-low range. It serves as a minor support or resistance level. Next, you have the Chiku, also called the lagging span. It is the current close plotted 26 periods back. If the Chiku crosses above prices, it implies a break of resistance, and if it crosses below prices, it implies a break of support. Now let's talk about the cloud, or Kumo. This is the shaded area between the Senkou span A and span B, and represents a support and resistance zone for the market. The span A is the midpoint between the Tenkan and the Kijin, plotted 26 periods into the future. The span B is the midpoint between the 52-period high-low range, also plotted 26 periods into the future. The market is bullish when prices are above the Kumo, or when the Kumo is sloping upwards. It's bearish when prices are below the Kumo, or when the Kumo is sloping downwards. We'll focus on the Kumo from here on out. So what exactly is a Kumo twist? Since the span A reacts faster than the span B, a bullish Kumo twist occurs when the span A crosses above the span B, indicating bullish momentum. Conversely, for a bearish Kumo twist, you're looking for the span A to cross below the span B. Let me open a custom template in AlgoWizard and code in this condition. It's actually one of the pre-programmed conditions that appear when you search for Ichimoku. I prefer not to optimize the default 9, 26, and 52 periods used for the Ichimoku, since its creator spent 30 years perfecting it. I will select strong for signal strength. For a bullish twist, a strong signal means the current close is above the Kumo. I'll use a bar shift of 3, meaning the condition will be applied to the third most recent close. This 2-bar delay allows some time for bullish momentum to develop. I'll insert a placeholder for a random condition here, so the genetic builder will populate it with an indicator from the pool that I will select later. Market entries will be used. For exit methods, I will select a stop loss, trailing stop, and a time stop, all to be generated randomly. For shorts, the Kumo twist condition is flipped, so select the bearish one. A strong twist here means the close has to be below the Kumo. The random condition for shorts is a negation of the long one. To reduce curve fitting, I will use the same exit methods for shorts. That's it for the template. Load it up into the builder when selecting strategy from template. I will run backtest from 2015 onwards on the 30-minute pound yen. The first 8 years will be used for in-sample optimization, while 2023 and 2024 will be used for out-of-sample testing. Configure your trading costs as per your broker. Under trading options, I will only specify a weekend close at Friday 2300 hours. The building blocks is where you'll select the indicators to populate the random condition placeholder in the template. I recommend starting with indicators you're comfortable with. As was specified in the template, market orders will be used for entry. Stop losses will be mandatory, while trailing stops and time stops will be optional. Custom filters is where you specify the minimum performance you will accept. For both in and out-of-sample portions of the data, a minimum 1.3 profit factor is required. I also require at least 350 trades over the backtest, or about 3 trades a month. Now run the builder. Here's one of the strategies it came up with. In addition to the Kumo twist, the builder added a 15-period Hull moving average condition. The Hull moving average is a combination of weighted moving averages, each using a different look-back period. According to its creator Alan Hull, it strikes a near-perfect balance between lag reduction and curve smoothing. To calculate an in-period Hull moving average, there are 3 look-back periods required. The original n over 2, and the square root of n, all rounded down to the nearest integer. So for a 15-period Hull moving average, you need periods of 15, 7, and 3. First, you calculate a 7-period weighted moving average. Multiply this by 2, then subtract a 15-period weighted moving average. Finally, apply a 3-period weighted moving average function to get the whole moving average. For longs, the 15-period whole moving average of low prices needs to be falling, after which we enter at market. In addition to the Friday close specified earlier, a 3 ATR stop loss was added, together with a 79 bar time stop. Shorts require the moving average to be rising instead, and also use high prices instead of low prices. Personally, I would prefer to use the same price type for longs and shorts, but I'll let the backtest results do the talking. At a fixed 0.1 lots per trade, the strategy displayed remarkable consistency over the 10 years, even throughout the out-of-sample portion, which implies that curve fitting was minimal. We comfortably exceeded the minimum allowable sample size of 350, as well as the in and out of sample profit factors of 1.3. The return over maximum drawdown, which the genetic builder optimized for, is impressive at 22. Note that returns are additive, whereas the max drawdown is a single value. When comparing strategies using this metric, make sure their backtest lengths are equal. Under trade analytics, there is good balance between the long and short sides of the strategy, despite the whole moving average using different prices for longs and shorts. Thanks to the strategy's consistency, returns compound nicely when I risk 3% of capital per trade. Over 10 years, a $5,000 account grew to over $500,000. Hopefully you found this video useful. Let me know if you have any questions. For the Ichimoku's Tenkan Kijin crossover strategy one mentioned earlier, check out the video at the top. To learn how StrategyQuant's genetic algorithm operates, check the video at the bottom.